This is Justin for November 23rd, Wednesday, Fib Day in 2022. And I'm zoomed out looking at all four corners here. And so on the daily, we continued on up. On the 3 minute here, we made a really big S curve. And I'm zoomed out like this just to point out a few different places where everything lined up. So the first one is actually here. We had a really nice bull candle closing below the 10. Here's the 10 EMA setup. Entry below, stop up here, and it gave you an incredible opportunity to go bearish because even you got a bear candle right there that you could have gotten in above and a stop below, and this was less than $1 risk. Also, when that was happening, you had a similar thing happen where you had the a bull candle also closing below the 10 on this call. So this is the 4025 call, the 4,000 put. What's crazy about this being the 4,000 put is we're about 25 points away, and it's very inexpensively priced at 10:30, which is a typical reversal time. So like a number of things lined up, and if you had taken this, you could have gotten a trade set up at like 250, I think. Or was that 3? Where I just was looking. I'm gonna turn off the drawing. And okay, so the high here, 275. Okay, so you would have been buying at 3 and a stop down at 2. And the stop price would not have been hit, and it would have triggered you in, or stop limit. So it would have triggered you in a couple candles later here at 330 was the high. 312, yeah. So anytime in here, you would have been triggered in. Let's see. This candle had a low of 310. This candle low of 3. This candle also 3. So somewhere in here, and when it's doing that, it's also, let me zoom into this because I know this is small. When it's doing this, so it broke down, retested, rolled down, and then gave you a really nice S curve here. And then we didn't know it was going to do that, obviously, just like we didn't know that it was going to do that. I think there was an FOMC at 1 o'clock, and I didn't realize that was happening the day before Thanksgiving. Happy Thanksgiving, everyone. The other thing to see here, it right at the open. Oh, let me finish my thought on this. But so if you had gotten into this buying at 3 and a stop down at 2, target would have been this previous pivot here at 6. When it didn't get quite up to 6 right here, it's possible you could have moved your target out, but unlikely. I mean, this is far enough away, you're not in the trade for that long. It does pull back, I wouldn't even be changing my stop at this point because it could pull back further. It could put in a pivot, lower wick down through here and then bounce. And obviously it didn't do that. It just ran. So it's unlikely that you would have gotten a better target unless it moved so fast. Maybe you got better than 6. If your target was set at 6, the next place would have been the pivot here or here. So still, you're not going to sell up here at the high. I mean, there wasn't really a reason, like, why would you set your target up in the range here? It never made it up to the open high up around 13. So, that price wouldn't have been hit. So this is one where, you could have gotten in really nicely down here, 3x2, but then your target still would not have been, way up here, right at 11. Like that just wouldn't have been set up from the get-go. So we switch. Let me switch back to this because this was interesting. We had a really strong rally right out the gate, except for these 3 candles, which I was really hoping one of them would go bearish. But one of them did on this call, and then 2 of them went bullish on this put. And so this is where I need to make some more rules for my own setups that, if you see the 10 EMA setup on a put call, combination. So like the only one that would have matched up in both was that candle and that candle, where it's the opposite direction of where you want to go. So it's basically the 10 EMA. You're getting that, bear candle close above the 10, bull candle close below the 10. And even though it's so close right there, it just didn't flip to be the opposite direction. But basically the idea is that you're trending and you want to trap, and that's the trap. So, there were people who were coming into this shorting it. That's that upper wick, people were shorting, and it just didn't change it on the 3-minute, but it could have worked here. This would have been a little bit hard to set up because your entry would need to be at like 8, but your stop would have needed to be below this candle, like at 6 maybe. So that's a $200 risk. Yeah, it just wouldn't have been a great setup with $100 risk. You would have had to go out maybe the 40-50 strike. But before I go there, actually, I don't think I'll look at that one. You can look at that one. But I also just wanted to point out some things, how this was reversing. So obviously we had that 10 EMA we just talked through. You had another one here. This retested a little bit past halfway up. Didn't quite get back up to its own high of this candle. So, when this is happening, it's like, okay, if we were to retest this, so this was a really nice rollover here, and then it was come back up. It's like, could we roll over again here? And, there may have been some people shorting here, but then they were shorting right into FOMC. And after FOMC, we were just doing kind of what we've been doing. We've been making this kind of triangle shape, compressing. And if I drew it a little different, kind of like that, and we broke down and then sideways. So markets obviously closed today, Thursday. It'll be open for like half day on Friday. See if I get around to a video for Friday. I may skip that one, but there was, let's see, I think there was some opportunities bullish in here. Right there was a really nice one that lined up with that candle and lined up with, let's see, where is it? This candle, I think. So when that's all happening, again, it's similar, you can go bullish here. It's a little more expensive with this strike. It's possible you could have gone out a little further, or you could have taken this strike. The setup here is entry above, so that would have been 450 and a stop down at 350. And that would have been a really nice rally. And then if you knew about FOMC, get out before it. It moved back up to, 6 would have been a good target, or 650 to open to this candle, obviously before FOMC. And then once FOMC hits, you actually had another opportunity to get in at the same price. And then that really just skyrocketed, actually took out the high from earlier, up around 13 here, 14, almost 14. So that would have been a really nice move being that, but it's always questionable what it's actually going to do during FOMC, if it's going to come down too far and then go back up or whatever. And then you had another opportunity with a bigger candle here, but it came back into the same range just a little bit later. I don't know that one would have set up as well. That was, let's see, that was this one. Going at, looking at just 10 EMAs, that's what this is here. So this is the 10 EMA with a bear candle closing above the 10 again. This candle, so right at 2 o'clock, it's getting late in the day, and this was a massive, lower wick and massive candles. This would not have worked. You would really need to be out further to get this into $100 range. But then it's questionable, how far up it could have gone. You definitely get some compression here on the call. And we got this going on here, and then we broke down. We still ended up, I think, in the money. Yeah, we must have been in the money. Yeah, by a little bit. So that's what's amazing about these two, just seeing about these two. If I go and look at the 40-25 on both directions, you have some very similar but opposite, obviously, movements. And you're just losing all that premium choppiness, even since 1 o'clock for the FOMC. You just have a lot of value here that just gets sucked out. So this is just a really good thing to look through and understand how playing these options, you're going to lose a lot of value. You got to be right immediately for it to work. And if you're not, and it's late in the day, just get out for whatever profit you got, or just get out before you're losing it all. And yeah, just be quick with these setups, with these trades. But there's some definitely opportunities to go bullish early on, getting into a bear rollover. another rollover, and then taking this bullish into FOMC, or potentially holding it into FOMC a little bit further, or getting in again. So a bunch of great opportunities. I think back in the daily, we're still headed back up into the range here. It just makes sense that we'll tag this or push through. I think we'll just keep pushing there. It's possible that we could have some sort of thing happen. Well, today market's closed. Friday, tomorrow it's a half day. We could have a small inside candle, even if it's bearish. That'd be great. Just build some pressure here with very little volume, just a shorter day, and then push higher and have a bigger breakout, and that could turn into a bigger trap. Right now, today we made a slightly higher high than right here. Slightly. This was 40.28.84, and this was 40.33.78. We're contending with some of these levels over here. So the high of this candle is just above us. This is resistance. These levels are some resistance here. This is where some folks were selling last time, before we gapped down and ran down. So we're going to start hitting some of this resistance. If we can push through it, I think more bulls will say, hey, we're making higher highs, and then that will be the trap. That's what I think is going to happen. But we're still probably a few days away from that. I don't expect that to happen on Friday. Maybe next week. So, but we can also just trend through here. I mean, I think it's really likely that we could just push up. Let's say we do this, and then we come right back into it, and then we just kind of do some compression here. It's not going to be that tight because the 100 and 200 don't move that fast. But what if we just do some zigzagging through here? I just drew this into next month, and then eventually make a decision. I think that could just chop out a lot of people. Kind of similar to what we did down through here. It's like this is just sideways choppiness. And the more smaller candles that we get, we just had two really small candles here and here. It's just going to build that compression. So with being between the long-term moving averages, building compression with smaller candles, yesterday was or Tuesday was a great bullish gap and go. Today was a continuation of that. But with holiday week, I think we're going to lose some steam into Friday, and we'll see what happens. But those are my thoughts. Hope this helps. This is Justin. Thanks.